In the last 3 decades of NRM's reign, Uganda has made significant progress in infrastructural development, trade and investment, the energy sector, as well as ICT, among others. As the country celebrates the 34 years of NRM rule, we take a look at some of the key projects and policies that are playing a critical role and will continue having a major impact in Uganda's ambition to become a middle-income economy in the near future. This feature was compiled by Robin, who is my camera person, and I. Uganda has in the recent years managed to record a significant annual growth of about 5%. The growth of the economy has been spurred with government's focus on priority areas such as trade and investment, infrastructure development, peace and security, education, ICT, among others. The steady growth is attributed to the National Resistance Movement strategic plans geared at uplifting the livelihood of the citizenry and creating a conducive environment for investment.
The other parts of the world have gone from what they call the first industrial revolution, which is the use of machines instead of the use of muscle. Then the second industrial revolution is electricity, when electricity was introduced. Then the third one, the automation which started. And then the fourth one is this one, the artificial intelligence. Now, all those phases are here now.
In the recent Brookings Institution report, Uganda was ranked among the 10 fastest growing economies in Africa between 2015 and 2019, recording at least 5% gross domestic product growth per annum. Brookings Institution, an American think tank, further projects a robust economic growth in the current decade, with Uganda singled out among 5 countries in the African continent that will set pace and grow at over 7% per annum. Key sectors of the economy that will continue taking the lead in fostering Uganda's socio-economic progress include trade and investment, infrastructure development, energy sector, mineral sector with oil production expected between 2020 and 2030, ICT and innovation, and last but not least, peace and security. However, for this projected progress to be realized, strict measures have to be put in place, especially in enhancing locals' participation. Enforcement and embracing the Buy Uganda, Build Uganda policy is seen as critical in commanding Uganda's socio-economic growth agenda.
A number of factories have been put up, for example, Sorority Fruit Factory, the tea industries in the Kigezi region, and we are working towards establishing a tea industry in Zombo. The supermarkets have improved on the shelf contents. As you can see, that the local content is now more or less above 40%. Fresh fruits are more above almost 80%. That is an achievement for our ministry because of the Bubu policy. But it's not only that. Other industries like cement now are selling local. They have opened up 5 more cement factories, whereas we had only 3. Steel and industry has gone up to production of 1.7 metric tons. Before it was only 800. That means that because of Bubu, these people are able to provide a market, so production has gone up.
Addressing trade imbalance between Uganda and trading countries, improving standards of locally produced and manufactured products, and innovation is vital in enhancing sustainable growth.
EU was going to ban exports of Ugandan agricultural products because we were not conforming to certain standards. And those are standards which are very easy to attain. And it is with the technical people. We were going to be banned from exporting to the EU. And you know what that means? Do you know what the impact will be? That a farmer somewhere will not be able to sell their product and will not be able to export it and will not be able to earn it. Foreign exchange.
We have also improved on the policies, and so the NRM government has created a conducive environment for this, and Ministry of Trade is one of the most effective ministries during this period, because now we have surplus trade volumes. For example, with Kenya in poultry, in dairy products, and other products. With DRC, we trade in about more than 400 million US dollars. In South Sudan, we have issues with Rwanda, but we shall overcome them.
The energy sector, of course, is playing a critical role in Uganda's growth and development. With an efficient power supply, Uganda's middle-income status goal, which is pegged on industrialization, can be achieved in the near future.
The investment is high, and the ordinary Uganda is yet to benefit because more energy is being generated. And as you realize that through RARE, they're trying to ensure that there is more penetration of access to energy for the ordinary person. And I think you've seen that. So we hope it will work out.
The coming onto stream of Uganda's flagship multi-billion-dollar 600 megawatts Karuma hydropower project in the fourth quarter of 2020 will be a major milestone for the country. The coming onto grid of Bujagali hydropower station in 2012, as well as the commissioning of Isimba Power Dam in 2019, has helped sort out some of the difficulties that the business community was facing in Uganda due to power shortages.
We now have more than what is available to be used. However, we remain in a country that has an electricity access, or should I say connectivity, of 25%, but also growing. Now, if industrialization as we see today is taking root with more industries setting up shop, industrial parks being built, but also Ugandans becoming more and more able to afford electricity, this 25% access could in fact increase to 30%, to 40%. And that is in fact the outlook of the National Development Plan 2 and going into National Development Plan 3.
With Uganda expected to have more than 1,200 megawatts surplus electricity by the end of 2020, more efforts geared at utilizing the surplus power must be accelerated.
So for us, we're excited, and it's not yet uhuru as far as we are concerned, because we believe that there is a lot of tremendous effort going on in rail electrification and other connections to the last mile, which will also increase the level of access as well as the level of connectivity. So what we call excess today may in the next possibly 5 years be a deficit.
As more investors continue to come into the economy and more factories and industries set up across the country, Uganda is bound to change its status quo from a net importer to a net exporter to the region and beyond. Dennis Igoa for UBC News.